Trump's whiplash tariffs, allegedly aimed at boosting American industries, had an unintended consequence. And I should add here, unintended but quite predictable consequence. When you prioritize political agenda over economic reasons, when you implement your trade policies, this is what happens, this is what you get. Tariffs coupled with using economic sanctions as a weapon against your non-aligned states, and of course, the elephant in the room, US debt crisis. We're now looking at $37 trillion in national debt. Interest costs to service that debt have already surpassed defense spending and Medicare spending. It is now second to Social Security costs. As you can see here, the interest on national debt is expected to rise sharply as the federal government's ability to cover other important programs, such as defense and social entitlements, will continue to weaken. That is a signal investors are selling U.S. assets and moving their money elsewhere right now. If Washington isn't standing by the dollar like it used to, they might actually start looking elsewhere for returns, and this is precisely what they're doing. U.S. markets are underperforming. The S&P 500 is among the worst global indices this year. Meanwhile, Asian and European stocks are rising. Even the bond market is feeling the pressure now as treasury yields increased while the value of the US dollar declined, which is a very alarming trend that supports the argument of the loss of confidence in the US dollar. Investors continue to sell US equities. The White House seems to recognize this, hinting at tariff rollbacks to calm things down, but it might be too late. It will be a challenge to build it back without foundational shifts in US foreign policy and how it positions itself globally. You can't simply undo decades of bullying other countries, sanctioning them into oblivion, and flip-flopping on tariffs on a daily basis. And if policies are adjusted swiftly, there is still hope for a more positive outcome for the global economy, including the US economy. The US economy is still the largest in the world, and it does remain a powerful magnet for investment. The big question is whether this is just a temporary reaction or the beginning of a fundamental reordering of global investment patterns and monetary system.